The trade you see on your screen was called out before taking, and it has actually gone to do over 20 to 1 in risk to reward. So what we're going to do in this video is break down the reason why it was taken and how you can find these entries yourself. Hi guys, welcome back to the YouTube channel. It's Sam. Basically just doing a video today breaking down this position as I mentioned in the intro. I'm going to show the before that I did send into the analysis group, and then we'll analyse why I took the trade, what happened whilst in it, and ways you can manage positions to maximise your profit. So what I'm going to do now is just play a video on the screen of the initial analysis that I did, and then following that we'll see how the trade is currently running and how you can manage this yourself. Mid-level here, you can see that we've had support, resistance, 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 and that's what we could potentially look at going into next week. A pending position, let's have a look. I'm going to draw a Fibonacci from here. Realistically, this 3350 zone looks really good for longs. Reason being, if we look, there's a 50 Fibonacci. There's also an EMA. We've got the round number of 3350, and we also have a 50 fib and the key level. So multiple reasons why price might react from this zone. You've also got a break and retest of this trend line and a change of structure within the market. So if price was to open down and push into this zone, this would be really good for a long position. If I get rid of that. So as you've just seen, that was the analysis before taking the position. What I'm going to do is just put my profit and loss in terms of the position that was taken on the screen. And then what we can do is manage how it was managed, how you can do it yourself, and how these positions here are rare, but when they do happen, you need to best position yourself to take advantage of the market. Okay, so we saw that price came in, it sniper entered this position overnight on the Sunday. So the market opened Sunday. I sent the analysis into the group for our members, and then obviously by Monday morning, this position had triggered and we were in a good spot to take profits, and price was continuously going. So if we see what's happened, price originally I did say potentially we would go up to this zone here. Now if you think about it, gold, if you look at these zones that I've got on my chart, they are every $25. So they go from 3275, you go up to 3300, 3325, etc., and they go up every $25. These are big psychological numbers for gold, and off the back end of that, price likes to react to them. If you have a look at the dotted lines on your screen, you can see historically how well price respects these levels. So my first take profit and my first area was actually the 3375 region, which gave us just over a 3 to 1 risk to reward ratio, which is great. Once I have taken profits from that position, I am no longer interested in anything besides leaving a runner for potential counter trend trades. Now, a runner is not always going to keep going. A counter trend trade is not always gonna present itself. However, that is not the point of leaving a runner. The reason you might leave a runner is simply because something like this can happen. I've had it multiple times where trades I've set with a 30 to 40 pip. I remember there was a Euro Australian dollar trade that we sent into the group probably a year or so ago. What actually ended up happening with a 40 pip stop loss, it did over 1,000 pips. Okay, so just based on that, the risk to reward is crazy. We did actually end up getting a counter off that, and if you roll your profits, like if you see in previous videos, you're in a very good position to start compounding your account in the best way and making sure that you're making as much money as you possibly can. So we've shown the analysis as to why I took the trade. We've shown the after, and I've also broken down a little bit as to how you can maximize profits on positions. You can see here, as price was moving up, easily trailing the stop loss between the high lows within the market, and you could either trail here, or you could obviously trail a bit more aggressively behind candles. You could drop the time frame, whatever you want to do, but I would always advise, if you're trading, let's say off the 4 hour like we do, then what you want to do off the back end of that is make sure that you're trailing the stop loss with 4 hour structure. Give the market enough kind of room to breathe, and then following that, you're not going to get spiked out too early. Trust the process, leave runners, capitalize from these positions, and if you are struggling, the link to the group is in the bio. You'll be able to join. There is a fixed offer for the first month now before prices increase, so you can be locked in for a lifetime price of £30 a month. You'll get access to my trades, Jack's trades. You'll also get crypto stock outlooks, active investment portfolio updates for what I do with my own personal stocks, just to get as much long-term gain as possible. And obviously at the back end of that, the link is there should you need it. Any questions, guys, drop them below, and we'll see you in the next video.